We often have people ask us whether they should register as a sole trader or a limited company. We know how confusing the options are and how important making this decision is. Don't fret, you've come to the right place. This video will guide you through the difference between being a sole trader and a limited company and why you might choose what is right for your business. What is a sole trader? According to HMRC, if you're a sole trader, you run your own business as an individual and are self-employed. In simple words, a sole trader is someone who works for themselves and owns their own business entirely. They're in charge of everything and keep all the profits after paying expenses, but they're also responsible for any debts or losses the business may have. What is a limited company? HMRC explains this as a limited company is a company limited by shares or limited by guarantee. In a nutshell, limited companies have their own legal identity, separate from their owners or shareholders and managers or directors. This applies even if a limited company is run by one person. You can get started as soon as you want to, as there's no requirement to register with Companies House. You will need to register for self-assessment by 5th October after the end of the tax year that you started your business. You only need to submit an annual self-assessment tax return, and you don't need to pay corporation tax or file company accounts to the government. There are also minimal record-keeping requirements. You are the only one in the business, so you can make all the decisions without needing to consult shareholders or partners. You run your business as an individual and retain all the profits that you make after you've paid tax. Your financial information remains private, unlike that of limited companies, which is accessible by anyone via Companies House. You take on all the risks associated with running a business, and you hold all the responsibility for its debts. You could find yourself in a situation where you need to sell off personal assets, such as your house, to pay those debts off. Raising business finance can be difficult as lenders and investors tend to favor limited companies. This means the growth of your business could be slower than if you were running a limited company. Sole traders pay 20 to 45% income tax compared to limited company owners who pay 19% corporation tax. Sole traders are taxed on the profits or losses of the sole trade personally, regardless of what profits they physically withdraw from their business bank account. Consequently, when the business is doing well, and you can afford to leave some of the profits in the business, it may be time for you to form a limited company. Some organizations choose to not work with sole traders due to the lack of legal protection compared to limited companies. Unlike limited companies, your business name is not protected. This means anyone can trade under the same name as you, which could cause confusion. Advantages of being a limited company. A limited company is legally separate from shareholders and directors, so you are not personally liable for any losses made by the business. Running your business as a limited company provides the potential for more profitability. Unlike sole traders who pay 20 to 45% income tax, limited companies pay 19% corporation tax, so they tend to be more tax efficient. They also qualify for a wider range of allowances and tax-deductible expenses. Disadvantages of being a limited company. Being a limited company involves more paperwork and administration than operating as a sole trader. The actions you need to take include registering with and paying a fee to Companies House, filing annual accounts to Companies House, filing company accounts and tax returns to HM Revenue and Customs, and filing a confirmation statement to Companies House. All these complexities mean it is advisable to employ the services of an accountant. Limited companies have less privacy than unincorporated businesses because the accounts and other documents they file with Companies House are on public record and can be accessed by anyone. So I believe that's it for this video. If you find it helpful, consider subscribing and giving this a big thumbs up, and I'll catch you in the next one. Thanks.